Welcome, everyone. Thank you so much for joining another one of our Davenport Dialogues episodes. Without further ado, I want to introduce Scott Gumieny, CPA, also one of our faculty members here at Davenport. Scott, thank you so much for joining us.
Thank you so much, Whitney. I recognize some names. I see Randy Kugler's on here, Michelle Davis, Leanna Rollins. So excellent. I'm glad you're able to join us. I'm going to start with sharing my screen. I do have some slides I put together that will go through what I want to cover today. And then, like Whitney said, I very much would like this to be formal, so don't hesitate. And then, or Whitney, don't hesitate to let me know if there's a chat message, a specific question as I'm going through these items. Or if you want to just turn on your microphone, or if you're, oh, I have a pertinent question right now, totally okay. I'm happy to address those questions as they come up, rather than wait until the very end. So just going to discuss some individual tax updates, specifically related to the American Rescue Plan, some of the discussion around the student debt relief programs that are out there, especially the new one that Biden made public in August of last year, and then just a little bit of looking ahead. And that has to do with certain tax provisions within the Inflation Reduction Act. So what I would like to cover, minimize this, with American Rescue Plan, really that has expired. So that was implemented during COVID, covered a bunch of different areas. They had the payroll protection loans that were issued. Stuff specific to individuals, though, would be the expanded child tax credit, the additional or advanced child tax credit payments. They expanded the earned income credit, the child care credit. There was a bunch of items that specifically related to individuals that they implemented for the American Rescue Plan. And really, what I'll cover is how those have all expired in 2021. So if you're filing taxes for 2022, which would be the current tax season right now, it's going to look a little bit different, especially if you were in the category of, getting or applying or eligible for the provisions under the American Rescue Plan. I'll piggyback on that and talk a little bit about Grand Rapids policies with individuals, especially as it relates to the American Rescue Plan, and then a little bit about the 1099-Ks. I do also want to talk about student debt relief. I know we only have 30 minutes, so it might be a little quick to get through all of this. I know that has been a hot topic. It's been in the news lately. I just want to expand on some of the tax consequences that will result when the debt relief forgiveness plan ever goes through. And then I want to look to talk about the clean vehicle credits that were implemented under the Inflation Reduction Act. So those will be moving forward. Without further ado, American Rescue Plan. So the CTC is the child tax credit. It's back down to $2,000 per child, 16 or younger on the tax return. For the American Rescue Plan, they expanded that to $3,000, $3,600 if the child was 5 or younger. They made those amounts fully refundable. Only $1,500 is going to be refundable. That's the additional child tax credit. It's just reverted back to what the Tax Cuts and Jobs Act had implemented in 2017. So that is a smaller amount. If you have children listed on your tax return, you're not getting that additional $1,000 or additional $3,600 this year. Earned income credit, I know this one's not hugely popular. We see this a lot in our VITA, Volunteer Income Tax Assistance Program, but the earned income credit was expanded for individuals that didn't have any children. So during or for the American Rescue Plan, they adjusted that to or increased it $500 or no, $1,000. So you could have gotten $1,502 refund, and this is a refundable credit for being single or married filing joint without kids or without children. So that has reverted back to 560, which is the 2022 amount. So that may lessen your refund. The big one, though, is a child care credit. That was expanded quite a bit for or under the American Rescue Plan. If you were paying for your kids to be in daycare while you were working, you could have received up to $8,000, and it was a refundable credit under the American Rescue Plan. I know we had worked on Invita a couple of returns where they maximized the full credit. We all know daycare is extremely expensive. And those boosted refunds for a couple of our clients under VITA because that was such an expanded credit. So if you are paying for daycare, that has now went back to what it was before the American Rescue Plan. There's only 6,000 of eligible expenses, and only you could get 35% of that as a refund or credit rather, but the most common one is like a $1,200 credit for the child care credit. And it was $8,000 and fully refundable under the American Rescue Plan. So that's a $6,800 difference that could be impacting returns this year. Child care credit 2 is non-refundable for 2022. It was fully refundable in 2020, 2021. For the American Rescue Plan, they also had stated they were going to issue 1099Ks. So these come from third-party vendors like Venmo or PayPal. If you were doing transactions using those TPSOs, third-party settlement organization is what TPSO means, then you could be receiving a 1099K as part of the reporting changes the IRS wanted to make. That was talked about and discussed during the American Rescue Plan, but they decided to pause this, and they just recently decided to do this. They wanted to issue those 1099Ks, and they will probably do this for 2023. So next tax season, you'll have some clients potentially or have received these 1099Ks because they're issue them if you have amounts exceeding $600. So if you are Venmoing your son or daughter through the app and that exceeds throughout 2023 $600, well, that could be a tax document that you get for 2023 that you now need to figure out how to incorporate on your next year's tax return. So that's going to be a big adjustment. A lot of people use those apps to transfer money back and forth. Some of that activity is taxable, some of it is not. So, I mean, a lot of firms have been dealing with, well, how are we going to advise our clients, especially clients who don't know or maybe self-prepare their returns. What's going to be the guidance on this? Are you just transferring money that's not going to be a taxable event, or are you receiving money from selling goods online or providing a service and you collect a Venmo payment that way? It could become quite an ordeal for next tax season. It was supposed to be live for 2022, but the IRS has paused that. The stimulus payments, we get some questions in VITA about this. We have clients come in and is there going to be more stimulus payments? We need more stimulus payments. Right now, the current guidance from the is in the government or the White House is there aren't any scheduled stimulus payments. The last ones were issued in 2021. It was $1,400 a person listed on the return. There has been no discussion of new federal stimulus payments. Just keep in mind, and this would have been on the 2021 returns, these amounts are not going to be included or taxable income either on the Michigan returns or the federal returns. They have been clear about those stimulus payments. And then just one more thing to know. For Grand Rapids has added and highlighted in their electronic instructions at least that they are no longer accepting employees who are allocating time between home and work. So Grand Rapids will charge income tax on all people living in Grand Rapids or working. So where this becomes an issue is if you work in Grand Rapids, but you live in Wyoming or Granville, you don't live in Grand Rapids. And then your employment or your employer has, okay, you come in 2 days a week and then you can work 3 days from home. In 2020, 2021, Grand Rapids allowed you to allocate the time you were in the office and the time you were not. No longer the case. They came out and said, since the government has lifted, Michigan has lifted stay-at-home orders, you have an office that you can go to work, you can no longer allocate between work and home. So even if you do work from home 3 days a week and you're a non-resident of Grand Rapids, all of those earnings are going to be taxed in Grand Rapids. And that's just, Grand Rapids saying because there's not a, stay at home order or work from home order that they're now going to start taxing those earnings. The only other way to allocate would be as if you work for multiple locations for your employer. So you may have to go into Grand Rapids and work for your employer and then go to a different location outside of Grand Rapids. You can still allocate wages that way. All right, student debt relief. And then just Whitney, Tommy, I see a chat has came through. Just let me know if there's any questions. I know this has been a hot topic though, the debt relief program. Biden came out last year in around August and had stated, hey, we're going to forgive $10,000 of federal loans or $20,000 if the student received Pell Grants. And then that has since been on pause. So there has been no, I know they tried to issue it and some student loan recipients may have received a letter saying you've been approved. Right now it's on pause. They're going through a whole legal process. They have said that the payments on federal loans are also paused until that is settled. So if you are not making any payments right now for your federal loans, that's because they've been on pause, and it will remain on pause until June or until the Supreme Court comes out and settles the student loan forgiveness that Biden announced in August. And the reason for that was, you don't want students to have to start repaying when, they owe maybe only $10,000. So if they had started repayments on loans in January like they were planning, they felt that was not fair to those individuals who could have gotten those amounts forgiven. There are other student loan forgiveness programs that have been around, not specific to Biden's announcement last year. The second bullet point item is income-driven repayment plans. So you apply for this IDR and you have to make on-time payments. And then if after 20 or 25 years, you still have a balance for your student loans, you can get that balance forgiven. This one's unique because it is not specific to working for a not-for-profit. You don't have to be, that's the PSLF or TLF down below here. You can just be working and file for IDR. You basically fill out an information that bases your payment on your income level. So many people have already done this if they're repaying loans for the federal government. I know I have an IDR filed with the federal government, but it takes basically your income and then takes a minimum amount that they feel you can pay towards your loans. And then if you do that for 20 or 25 years, depending on what types of loans you have before applying for IDR, whatever's left after those 20 or 25 years of on-time payments will be forgiven. Now, most of the time, in most cases, people will not have balances under the IDR. It could be more commonplace now with the pause that has been going on since COVID started, so 3 years ago now. So they're seeing that maybe even under IDR, even after 20 or 25 years of on-time payments, there could be balances left. and those balances will be forgiven. Now, what's interesting with this plan is whatever balance is forgiven is also taxable. So the federal government will tax it. Michigan will include that as a debt forgiven, and you will have to pay tax bill on any amount. Shouldn't be a large amount after 20 to 25 years, but that is something that to be aware of at least. I know that the IDR has changed a little bit. It used to be 10% of your adjusted earnings would be or go towards your federal student loans. Biden, under the 2022 announcement, said that will be limited to 5%. I don't know if they've made that adjustment yet because there's dispute on that announcement, but that 5% threshold, if applicable, you could have a decent balance left after 20 or 25 years, and that could be taxed. The other plans, though, the PSLF. So I know if you're a Davenport employee, this is a big one. This is public student loan forgiveness. So if you work for a not-for-profit, it doesn't have to be a university. Hospitals are popular ones, but any 501c3 entity that has not-for-profit status with the IRS, after 10 years of on-time payments, you can have your balance forgiven. This is big for Davenport employees. If you fill out this form, you are eligible. It will look back at, okay, when did you start your employment at Davenport? How many payments have you made since you started your employment? So we'll do a look back and count payments you've made since being employed for a not-for-profit. They did expand this under Biden's announcements last year. They made more types of federal loans eligible, and that's an important distinction here. These have to be federal loans. All of these student debt relief programs are all federal loans. There are private student loans out there that exist as well. Those are not eligible under any of these plans. Those typically have been continuing, people who have those loans have been paying on them throughout COVID. There wasn't a pause that they initiated. So those private loans, and those would just be from, your normal lenders like Chase or Wells Fargo, a normal bank name, and those would be the private loans. So those are not eligible for these debt relief programs, but anything federal. And they're a bunch of different federal names over the years. There's the Parent Plus loans. Those are popular ones. If you do have a Parent Plus loan, or maybe you have a dependent or child that you have a Parent Plus loan with, after they graduate, they always advise, especially for IDR or public service loan forgiveness, to consolidate those Parent Plus loans, put them under the dependent's name, and then have them responsible for repaying those loans, because then that makes them eligible for the IDR plan. If they're working for a not-for-profit, they get that PSLF plan. So you want to consolidate those loans. I know the current servicer of student or federal student loans, it has changed a couple of times. The current one is Mohila, though. They do a good job in explaining, you have these different types of loans. You need to do a direct consolidation, get it into this federal loan classification, so you're eligible for PSLF, or all of these payments moving forward would be eligible for PSLF. I know through COVID, they did some, okay, if you haven't consolidated yet, but have been paying on time in these different loans that are not eligible, we'll count those payments towards the 10 years of on-time payments. So they did expand that. You had to have applied last year at the end of October, but they have since extended that application process too. So if you're at a not-for-profit or think you may be eligible, or you're a teacher even, you certainly want to look at the public service loan forgiveness. It's a very beneficial plan to be a part of, and it works in conjunction with the IDR. So you'll have your payments based on your income, and it will be no greater than 5% of your adjusted income. They adjust it for certain other items. So that will be your payment each month for the next 10 years. And if you do those payments on time, then you get that loan forgiven, and whatever balance you get forgiven, if that's proper English, is not taxable. So you do not have to pay tax on that. Certain states may charge income tax. They haven't been really clear on the public service loan forgiveness, or TLF. I know I've looked up Arkansas, California, Indiana, Minnesota, Mississippi, North Carolina, and Wisconsin may have. You pay taxes on the debt that's forgiven after the 10 years of on-time payments, or if Biden's plan goes through, those portions could be subject to tax at the state level. PSLF, you do have to file an employment verification form to be eligible for that. It's on the MOHELA website. If you're a Davenport employee, Davenport HR is very familiar with this form. I've done it every year since I've been an employee at Davenport, a full-time instructor. So they are aware, they know how to fill it out, and then you have to send it electronically to MOHELA to make sure your employment is verified as being under PSLF. Okay, the other issue that I wanted to briefly talk about here are the state issued relief checks. So I know some of these states last year issued relief checks for disaster relief. It could have been COVID related. It could have been a disaster relief program. I know that California, Colorado, Connecticut, Delaware, Florida, Hawaii, they all issued some relief payments. And individuals have been asking the IRS, well, do we have to report these relief checks? They're not federal stimulus payments. They're just issued by the state on our tax return. And the IRS has came out and said, no, those will not be part of your tax liability. You will not have to pay taxes on those amounts. The only one Michigan related would have been, and hopefully if you were eligible, you received this already, but insurance companies issued a $400 premium refund check. I know I had received mine last year. Those are not taxable either. Those would be considered under this guidance that the IRS issued. Michigan, of course, will not tax those $400 premium rebate checks, but they do if you're applying for homestead property tax credit or home heating credit. That $400 amount has to be part of your total household resource. Michigan has said, hey, that refund check you have to add to your household resources in calculation of that credit. And that homestead property tax credit, you have to have earnings less than $63,000 and taxable value, I believe, less than $143,000 for you to be eligible for that credit. And then, of course, have to have paid property taxes. All right, I feel like I'm going through a lot of stuff. Just let me know. Hopefully I didn't lose everyone. I've just been talking to myself. Last thing though, Inflation Reduction Act, there was a bunch of stuff that came through on here, but a big one that I've seen some questions on has been related to purchasing electric vehicles, really clean. They call them new clean vehicles and used clean vehicles. So if you are purchasing or looking at buying an electric vehicle, you may want to consider, well, how do I get eligibility for the $7,500 credit? I know that they've had this credit previously for new clean vehicles, but it was treated differently. So they allotted automakers who have electric vehicles a certain number of times they can use the credit. So like Tesla used up I think it was like, don't quote me on this, but 200 or 300,000 car sales. So they sell 200, 300, then they can't have that credit anymore. So it was kept at the manufacturer dealership level, but now you are applying for this when you're filing your taxes moving forward. So if you are buying a vehicle, if it's a new one, you can get the $7,500 credit here. I have the link to, and I'm more than happy to share these slides after the meeting. But this will cover who qualifies, how do you get it? You want to make sure you meet these certain requirements. I know a lot of people will and I've seen this with the residential energy credit in VITA. You know, we have these people come in and say, hey, I put a new roof on my house. I spent $20,000, and the contractor or these vendors said I'd get a tax credit for that. And they're a little disappointed to find out, well, you know, it's only a $500 credit that you're receiving. They use it as a selling point. They don't always necessarily tell you the amounts that are eligible. That residential energy credit is a big one that we see, but it might happen with the electric car. So if you're buying a new electric car, make sure you're eligible. You're below the AGI thresholds. You're buying a new car. It's fully electric, or it's a plug-in EV. I guess those are qualified too, or a different type of fuel like hydrogen cars. But there is weight restrictions on here. And then there's also, say here, a gross amount. The retail price, the MSRP, cannot exceed $80,000 for vans, SUVs, or pickup trucks. And that is a huge one to look out for, because many of the new electric vehicles are more than $80,000. I think the Rivian truck is over that, or the SUV. The Ford Lightning is approaching that point, especially with dealerships marking up because there's such demand. So you have to watch out for it. If you're buying, you know, the new Hummer electric vehicle that's like $120,000, it's not going to be eligible. It is a clean vehicle. It meets the other requirements, but it's not going to be eligible for the credit because it's too expensive. I expect to see, especially GM, as they roll out more electric vehicles, to get vehicles underneath the amounts here at store more buyers. But right now, cars are expensive. You can, and this is the second link, there is a used clean vehicle credit. So if you are buying a new to you electric car, you also could qualify for a credit. And this begins in 2023 too, I should say. So you would have to have purchased it this year to get a $4,000 credit for purchasing a used clean vehicle. It's the same definition for a new clean vehicle, with the exception that it has to be 2 years old. So you can't be older than that. It does say on here. So for, have a model year at least 2 years earlier than the calendar year when you buy it. So if you're buying a 2023 used electric vehicle that qualifies for this credit, it has to be a model year of 2021 or older. And then it has to have a sales price of less than $25,000, which right now with car values may be different. I haven't looked at, or there hasn't been discussion on recapture of this credit. What if you take this credit and then sell your vehicle, and you sell it at a gain, which could happen. It's not real common for cars to be sold for a gain. Usually they're at a loss. Then you have no tax reporting that you need to do. If it's a personal vehicle, it's different for businesses. But if it's used as a personal vehicle, you sell it for a gain, and you took advantage of this credit, well, now you fall under that tax benefit rule where you received a tax benefit 1 year. Now you sold it. Do you have to report that as income if you sell the vehicle for a gain? So that will be something that could have further guidance from the IRS here. But I believe that's it. That's all I wanted to get through. Go back to the slideshow. Again, I can make these slides available. I'm sure Whitney or Eric will email them out to whoever wants them. I do want to plug VITA really quickly right now. We do have a website. So if you're making less than $60,000 a year, or you know someone who falls into that threshold, please tell them about VITA. The website here brings us directly to, we'll bring you directly to the VITA website, where it lists all of our locations and hours. So certainly if you have individuals that may want to take advantage of this free service, let them know about VITA. This website is very helpful. If you are not below that 60,000 threshold, you can still file taxes for free, and they will do your federal and Michigan returns through my free taxes. So this is linked on our website as well as right on the homepage. But this is very cool because you can set up an account through my free taxes. It uses the same software that we use for Vita. If you make less than 73,000, you're basically, TaxSlayer is the software, but it's pretty identical to TurboTax. So if you're used to paying, 100 or whatever, $200 for TurboTax, whatever it costs these days, don't do that. Go through this my own free taxes, or file my own taxes for free. If you're less than 73,000, then you get that benefit where I'll walk you through. It moves, it will save your information from one year to the next. So it's a very slick tool to use, should you wish to do that. And they will file I tested it out to be sure, but they will do federal and state returns. All right, that is all I had. Thank you so much. Are there any questions towards the end?
Thank you so much, Scott. We will definitely leave the chat box open here if anyone has any other questions. I do want to just wrap up and say that we have our next Davenport Dialogues coming up in 1 month on March 15th. We will be having Joanna Udo, our featured speaker, alumni, graduated class of 2014. And she is the founder of Bridges in Tech. So she's going to be talking about diversity, equity, inclusion, and the shortage gap, talent gap in tech. So please visit our website and register for that. And Scott, we can hang out for a couple extra minutes if you're available, if anyone has any other questions. But thank you everyone so much for joining us, and we hope to see you next month.
Thank you.
You're welcome. Michelle had a question. Oh, did she leave already? Okay, never mind.
You addressed the question, Scott. It was referring to people that are using like the money transfer online.
Yes.
And she was just wondering if you were referring to this year or next year, and you answered it
Yeah,
almost
definitely.
right in time when she said that.
Good. Definitely this year. Yeah. So that would have been a major issue. We would have got a bunch of questions invited. Hey, why do I have this 1099K? So we're thankful the IRS has decided to extend. And they said that it was to give taxpayers and tax professionals more time to inform their